Hi there, guys. I just want to take you through my own personal trading strategy. Just show you guys exactly how it works, and it's a very powerful trading strategy, and it makes me a lot of money every week. Literally every week is a winning week, and I just want to share it with you guys and show you how it works. So basically, it's a very simple strategy because I believe in simplicity when it comes to trading. It just consists of these indicators right here. We've got the black EMA, which is a 90 period EMA that is used for determining trend. Okay, then we've got an 8 and a 20 EMA. The orange one is the 20 and the blue is the 8. Then we've got the RSI, which is modified to 21, so it gives you less signals, so it provides you with perfect entries. And then we've got the awesome oscillator, which is set to standard settings. Okay, I've got the EMA set to 4 pixels, and I've got the awesome oscillator also set to 4 pixels. The only thing that's modified is the RSI, which you add a 50 level. So you come into RSI and you add under levels, you add a 50 level. You set and the actual signal line you set to 4 pixels. Okay, so the rules of the strategy, it's actually a strategy used by institutions and by banks. It's actually pretty much a major strategy as told by Dr. David Paul, who teaches institutional traders at banks. He actually trains them, and this is one of the main strategies that they use. So the rules of the strategy is for a sell signal, basically the black 90 EMA is determining trend. Okay, so whenever the price is below the black EMA, that we're looking for sells, and whenever the price is above the black EMA, 90 period EMA, we're looking for buys. So now I mainly use this on the 5-minute chart, and the main reason for that is you get very tight entries, and also your stop loss is very tight. Not too tight, but it's 15 to 20 pips. You can use the strategy on any time frame, but I use the 5-minute time frame because it gives you nice scalp entries, and it can also lead to major swing trades. So if we look at this, okay, this is the pound dollar. If we go to the hourly time frame, we can see that we're in a downtrend currently, because as you can see, price has just come below the black EMA. Okay, so this current setup, we're looking for a sell, but let me show you a previous sell, like over here. Price broke below the black EMA. We got a crossover on the 8 and the 20 EMA. Okay, let me just show you guys exactly where my crosshair is. Look at that, price broke below the black EMA, which has told us that the price is shifting now to a downtrend. We got a crossover on the 8 and the 20 EMA. The 50 level on the RSI, that's what you're looking whenever the price breaks below the 50 level. That's another indication that the price is shifting downwards. And if we look at our awesome oscillator, we can see that price is broken below the 0 level. All 5 of these indicators have lined up. So we've got 5 basic confluences. Okay, the major one is the RSI. That's telling us it's shifted from above 50 to below 50. Whenever you get a 50 level cross, I keep on telling this to people, whenever you get a 50 level cross on the RSI, your 50 level is a key place to a shift in price. Okay, so as we can see, all of these have lined up. Okay, basic setup. And look at this, look how the market dropped about 200 pips. And let's look for a buy setup. Look how price respects the 200 EMA. Whenever it's above the 90 EMA, we can see that the price moves up, stays up. Whenever it's below, it stays down. So let's look at this buy setup right over here. Okay, so we can see here, let me get my crosshair out, typical buy setup. And it's actually, that is quite a nice one. Okay, so we can see price broke above the black 90-day period EMA. We can see we got a crossover of the 8 and the 20. Okay, we can see that price broke above the 50 level on the RSI. And we can see price is just about to come up above the 0 level on the awesome oscillator. So if you look at this, your stop would only be about 15 to 20 pips. Okay, and then look what the market did. It shot up. So about 200 or 300 pips. Okay, so on a typical one like this even this little one here gave us 20 to 30 pips, which isn't bad. Okay, with the 5-minute chart, you're looking, to take 20 to 50 pips and get out the market. In the 15-minute, you can go for a bit more, maybe 80 to 100 pips. On the hourly, you can shoot for 100 to 300 pips, but I use the 5-minute because it gives you the best earliest and the best entries, and also tight stop losses. Okay, so look at this drop over here. Price is below the 90 period EMA. We got a crossover of the 8 and the 20. We can see that price broke below the 50 level on the RSI. We can see that the awesome oscillator turned red and is below the 0. Look how the market fell. So all you got to do, this is sticking to the trend, guys. Never go against the trend. Never, if the price is below, like this setup over here, I wouldn't have taken it. I would have waited. I would have left it. Okay, because I want to see that the trend has changed and it's gone above. I would have waited on this and I would have gotten here on the next crossover of the 80 and the 20. And the RSI and the awesome oscillator doing what they need to do. Same thing here. Look at this perfect buy setup. Exact same thing over here. This happens every day. Price is above the black 90 period EMA. Price over here broke above the 50. Awesome oscillator went from below the 0 to above the 0. We got in there and we took 100 pips. Okay, guys, and the pairs, a lot of beginner traders will trade correlating pairs. That's a terrible thing to do. Only trade pairs that are not correlated. Trade markets that are completely different to each other. Like if you look, I only trade the pound dollar, the pound Australian dollar, Nasdaq and gold. They're both completely separate markets. They're not linked to each other. Like if you trade GBP USD and Euro USD, they're both highly correlated. They're the exact same thing. So if you take a trade on the pound dollar, euro and euro dollar at the same time, and you get both going in the same direction, if you're right, you're going to make a lot of money, but if you're wrong, you're going to get it wrong twice. And if you're right on one and wrong on the other, you're going to make no money. So always trade markets that are completely non-correlating. The only pair here that'll be slightly correlated would be the GBP USD and gold. So when gold goes up, GBP USD would also go up. Okay, because when gold goes up, the US dollar goes down. Okay, so it's still safe to what I do is I only take one trade at a time. Never take multiple trades at a time, especially when you're starting out. Just all you need is one trade a day. And when you do win, when you catch your 50 pips or 100 pips whatever it is, even 20 pips, you get out the market, and your profits, look at your profits on a daily perspective and weekly and monthly perspective. Don't look at it on an hourly perspective, or go at the markets on a day-by-day basis. Keep it simple. This is a simple trading strategy. Okay, so I caught this move on Friday. Let me get my crosshair out. Look here, crossover, price broke above the 90 period EMA. Okay, price, we got a crossover on the 8 and the 20 EMA. Price broke above, price is above the what actually broke above earlier, but as long as it's just above the 50 level, you can see here it's just come above the 50 level. Our awesome oscillators also above the 0 level. Okay, then we enter that trade. Look, we caught 80 pips. Okay, same thing for a sell trade. Oh, here's another classical buy trade. Right over here. Price went above the black EMA. Crossover on the 8 and 20. Price went above the 50 on the RSI. Price went above the 0 level on the awesome oscillator. And we caught 150 pips. Or 100 pips, whatever that is. Same thing on a downtrend. Price broke below the 90 period EMA. Price broke below the 50 on the RSI over here. Price broke below the 0 level on the awesome oscillator. The crossover happened slightly further above, but we've already got, so I probably wouldn't have taken this trade. I prefer to see the crossover happen below the black EMA, but still we could have taken this one because we got already another 3 confluences, meaning that price is below the black 90 period EMA. We got the crossover on the 50, the cross down on the 50, and the cross down on the 0 on the awesome oscillator, and the market plummeted about 250 pips. So if we're looking at a current entry, if I were you, I'd stick to GBP AUD and GBP USD because they trend. They're both markets that trend, and also the point accumulation on those two pairs is almost like an indice or gold. They accumulate points very quickly. So if you an impatient trader and you want to accumulate profits and points quickly, then GBP AUD is probably the best of the currency pairs, and also GBP USD, it accumulates a lot of points quickly compared to any of the other pairs. If you trade Euro USD, AUD USD, the point accumulation is a lot less. AUD, like Euro AUD, Euro NZD, all those other pairs, the Euro GBP, the point accumulation is very, very slow. So I stick to these 4 here because the point accumulation is quick. That they markets that actually trend. Like you'll find a lot of pairs like USD CHF and Euro CAD and these other pairs you'll tend that are not completely major pairs, they're minor pairs. You'll find that they don't trend as well, and the point accumulation is less, and also they're very wicky and they'll stop you out easily. Whereas these pairs, the candles are smooth and solid. They will stop you out from time to time, but in general they're very trendy and very smooth pairs to trade, and they trend, which is key. You want to, a lot of those pairs trade sideways. So in a live market, like right now, this is the weekend, but for example, if this was the live market, we would have been getting in slightly late here. Where my crosshair is, I probably would have entered at the close of this candle where my crosshair is. But you could still enter here. Your stop would be slightly more. As you can see, this is a typical sell entry. Prices below the black 90-day EMA. Just drop below the 50 level on the RSI, which is indicating a momentum shift. The awesome oscillator has just dropped below the zero. And this could be easy a 50 to 100 pip move. Even if you only take 20 pips out of that, that's fine. And the nice thing as well, if the market reverses and goes up, you're only going to lose 15 pips, but then you guaranteed another buy setup. Just wait for the buy setup. Or if it comes back and then comes back down, you've lost 15 pips, but now you're waiting for the next sell entry. So just be patient on the setups. And when you're wrong, if the trade doesn't work out, because sometimes it won't work out, like let's look at it. Let's look at an example. Like this example here, we saw that price broke above. It only went up about 20 pips, and then we could have got out at break even here if we had moved our stop to break even, or we could have waited for the next sell setup and we could have caught the 30 pips going down. That's all about your mind, guys. It's all about waiting, being patient for trade setups and using money management. Like if you have $100 in your account, use a 0.01 lot size. When you got 200, when you make in your account grows to 200, then use a 0.02. For each $100, you must increase your account by 0.01. For each $100, you'll be shocked how much money you can make in a month just by sticking to your trading plan, sticking to your strategy. Okay, like this exact strategy, if you just stick to it, stop jumping from one strategy, one system to the next. Learn to master one system and get comfortable with that system and stick to it every day. Everything must be consistent in trading, and you have to be disciplined. Okay, you have to take it on a weekly basis, a daily basis, a monthly basis. Not if you lose a trade, don't get emotional. Control your emotions. Wait for the next setup. The market's not running away. It's going to give you setups all the time. They're only an hour or two apart. You just got to wait. Okay? Don't chase the market. Let the market come to you and wait for a setup. If you miss the setup, don't get into it. Wait for the next one. Never get into a move when it's already happened, because your stop is huge and you're going to end up losing a lot of money. Like, you can use this strategy on the hourly time frame as well, but then your stop is going to be slightly more. So if you're trading it on higher time frames, then you've got to decrease your lot size, but at the same time then increase your stop loss. Because you're increasing your stop loss, you'll have to decrease your lot size. So when you're going on the 5-minute time frame, you can increase your lot size slightly because your stop loss is going to be less. But look at this buy setup on the hourly chart. We've got our crossover of our 8 and 20. Price broke above the black EMA. Here we got a price moved above the 50 on the RSI. Price is above the zero line on the awesome oscillator. Look at that big push up. Look at that. It's about 300 or 400 pips. Look at the next one. Okay guys, so this setup here I wouldn't have taken, because what I'd be waiting for, if price breaks on the higher time frames, if price breaks below the 90 EMA, okay, and you want to stick to the hourly time frame, like right now, you'd be waiting for price to do a pullback, to do a correction, and then you'd wait for a crossover of the 8 and the 20. Okay, you'd wait for price to go above the 50 and then back down below the 50. Okay, for the awesome oscillator to also do its round and then come back down. All you got to do is wait for the setups and be patient and use risk management, and you'll make a lot of money with this strategy. Just stick to it and you guys will thank me. Just try the strategy out and leave some comments below and like and subscribe. And let me know how much money you've made with this. You'll thank me later, guys. Love you.